What you don't want to do is take out personal loans and get personal credit cards for your business. I would say bootstrap best you can. In the beginning, if you swipe on a 0% interest card in your personal name, try to erase that as soon as possible. But if you have that credit, get a business credit card, get 0% on your business credit card side, and then do it if you could wait. This is coming from someone who worked in a traditional bank. Yeah, we know you need it. You look tight on your financials. We don't know if you could pay it back because you need it so bad. You're tight. This is something that's built up over time. Now, are we comfortable lending you the money?
What's going on, Bag family? We are back, episode 42. This is Coach Darius D. Brown, and we have a very special guest with us today, Brenden. All right. Before we even get started with introducing Brenden to the platform and to you guys already know what to do. Make sure you like, subscribe, share with someone that you feel that can benefit from this value. We're in a season of heavy momentum, people, so we're only bringing the best on our platform, right? To share value, to share real value, real expertise in real time, all right? But without further ado, how you doing, brother?
Excellent, sir, man. It's an honor to be here. I appreciate it.
Absolutely, brother, absolutely. Brandon's coming all the way from the ATL, the city, and you know we're out here in the boondocks, so he had a nice road trip, man. So we appreciate you for even taking the time out to even grace your presence on our platform. It's truly appreciated, man. Well, guys, I want to give you guys a brief introduction of who Brenden is, a little bit of his bio, but I want him to expound as far as what he does, all right, in the marketplace. Brenden is a commercial loan officer. He started in banking. He has a bachelor's in business administration, and he served over thousands of business owners in his career. And he's big on serving his community. He's big on serving the marketplace. And we feel like that's one of the reasons why we wanted to bring him on the platform, because we felt there was synergy and alignment there as far as if you are a business owner and you're an entrepreneur and you feel stuck because there's so many people, and we'll get into that later on the show, but there's so many business owners that have innovative ideas and they have great ideas, right? But they don't have the back end. They feel like they're getting denied by traditional banking because they either lack capital, right? They lack the resources or the information. And this is where Brenden comes in to kind of give you guys some insight and some knowledge on how you can gain that capital to take your business to the next level. All right. So yeah, man, if you want to give the audience, man, as far as a little bit more of your background and how you started in banking.
Man, so first and foremost, again, honor, pleasure to be on the podcast with you, man. So before banking, I did a lot of odd jobs around the city of Atlanta. I did door-to-door sales. I was that guy in Sam's Club and Costco that you push your cart the other way that was selling DirecTV. So if you didn't want to get pitched as soon as you walk in the store, y'all know you cut to the left because there was some brothers right there hey, quick question. So I learned how to deal with rejection even before I got into the bank. I just give you this backstory because when I actually did apply to go to several banks, my career accelerated fast. But getting to the point where I actually applied, I had to sit down and kind of have a heart-to-heart conversation with myself, prayed about it, and see what I wanted to do as a career. I had a lot of odd sales jobs, but I said, what do I want to do? I know I'm competitive. I need goals. I like money. You know, I'm passionate about money. I want to help people with money and also learn at the same time. And I felt like working in a banking environment would be the best bet for me. So I applied at every bank you can think of, you know, Chase, Bank of America, Regions Bank, all these big banks. I got to a second round interview with Bank of America and they said, no, I didn't make the cut. So working back in odd jobs again, I got a job with a catering company where we are catering, you know, I'm a busboy, picking up trash and serving food in the Fox Theater and different, you know, wedding venues for people. And then one day we're serving a bank executives. We don't know what party that we're going to get. We just show up to work and they tell us, hey, you're going here. And then when you're at the party, you realize, oh, it's a wedding, or you realize it's an anniversary or some corporate event. So I'm at this corporate event for high-level executive bankers in Atlanta, and I figured that out, but I'm looking, dusty, crazy, no haircut. I'm like, I'm a busboy. Nobody cares what I look like. I'm just no fresh haircut, nothing. And then it was like I heard God tell me, first of all, I felt like I was like on the outside of a fish tank. I was like behind the glass, like looking in, like that's what I want, but I can't get it. And then I felt like I heard God say, you have not because you ask not. And I'm like, bruh, I'm dressed in this t-shirt, bad haircut, I'm dirty, like I'm picking up trash, like I'm not interview ready. But when God tells you to do something, you got to move.
Absolutely.
So the first person I see is a lady standing off to the corner. She's like on her cell phone or something. And I said, excuse me, how does someone get into banking? I've always wanted to get a job in career in banking. How does someone get in? And she said, well, you usually get in through someone you know. Do you know anybody in banking? I said, no. I said, but I know you. And she was just like, okay. She was like, do you have a resume? She was like, do you have any schooling, college? So I let her know. I said, I had a bachelor's in business administration. I do have a resume. She gave me her email. Come to find out, she was the assistant to the president of all of Atlanta for BB&T Bank. Now it's called Truist Bank. So my background's from BB&T, now Truist Bank.
Wow.
So the president at the time was this man. His name is Dante Wilson. He's still on the executive management team for Truist. Long story short, I couldn't get in from the bottom. So God opened up a door from the top down.
Come on, bro.
So
wow.
They called me. It took some time to get an interview, but they called me. They said, hey, we have positions open everywhere. Where do you want to work? I got to pick the branch I got to work at, the position I wanted. And I said, let me start out as a banker because I don't know anything about banking. Let me start out as a relationship banker so I can get my feet wet, learn, and do things like that. Where do you want to work? We have a position here. We have a position here. I said, that town sounds like it got some money in it. Let me go to that town. It was a 45-minute drive from where I was living at the time, but I did it every day, saved up money, got my own apartment, moved out there. Then I got promoted, right? Started learning the banking game, got promoted from a relationship manager to a team lead, then a branch leader. And then I started moving around and seeing different branches in my career. And we were getting the numbers up because I had that sales experience I was telling you about. Mm-hmm. So I got promoted fast and people started asking questions like, how are you getting these numbers? Like, because there was a Wells Fargo thing and cheating and people signing up people for credit cards at Wells Fargo. So they wanted to make sure I was legit. And I was all my numbers is legit.
Yeah.
It was just for me being in door-to-door sales and being at the Sam's Club and I'm in a couch. We got AC in here. I said, you guys let these people tell you no? Mm-hmm. Like when I was in door-to-door sales, they would say, it was something called a dead ear, where if someone tells you, nah, I'm not interested, we don't take that as a no. But if they say, nah, I'm good, then that's a no. Or if they slam the door in your face or something like that.
Right.
So when I was in banking, it was just like, why don't you have a credit card? Well, I do have a credit card right now. Well, are you getting rewards with that credit card? Are they paying you for that credit card? No. Well, why not? I don't know. Well, here you go. Sign here. I had a rebuttal for everything. I studied a whole slip. I studied, you say this if they say that. If they say that, then you say this. If they don't have a credit card, ask them if they're getting a 0% interest rate. Do they need to transfer their balance? I studied the whole thing, memorized it, put it into practice, and that's how my career grew. How did I get to where I am today? Well, after I became a branch manager and my role was 70% business, I really had a heart for the businesses, helping people get loans and lines of credit, helping people consolidate business debt, helping people get loans to start their business, even if it was like $20,000 on a credit card, just helping you buy the equipment that you needed to get started. I began to be passionate about that. Second thing, I had millionaires sit across from me. And this was back then where you knew they were a millionaire. Like you could see their account and everything. They would pour into me. All those people that said, you're so smart, you're brilliant, You could do it. I love that. And that began to grow in me. Everybody that had money, I asked them questions. If they had 50,000 or more in their account, I would ask them questions about their business. I was like so hungry. I would hear their story, and the plot is the same exact thing. Everybody has a different story, but the plot is the same. They started something, they stuck with it, and now they make money. Whether if it took 10 years, 20 years, or 30 years, the same plot for every millionaire that I spoke to. I'm talking about owners of assisted living facilities, pawn shops, private practices, MDs, medical directors, dentists, all these people, they started something, they stuck with it, and now they have a lot of money. It was this exact same theme that I saw. In my spirit, I'd never really understood how someone could retire at a bank. That's just me and my DNA personally. No knock to anybody that's working a W-2. I think W-2s are great. They provide stability. But for me, being around large checks, me sending wires for people to pay off houses, to give to their family, and having these conversations, I'm like, I can't retire here. So
I got you.
They were going through a merger at the time. It was around COVID. I overseen a good bit of employees. A lot of my team were taking a COVID vacation because when they got exposed to COVID, they can be gone for 2 weeks. So we had to close our branch. We were short staffed. And I just called my boss one day and I said, man, I don't think I could do this no more. Like, my trajectory was to go into the commercial space for the bank, but they had a freeze on the hiring department.
All right, cool. All right.
Okay, so where was I? Okay, so my trajectory was going to the commercial division in my bank. I began some training in that area, but because they had a hiring freeze and COVID-19, that was just unlikely, right? They were merging with SunTrust, so those people that in the SunTrust side, I'm pretty sure they were having some job security. So I took the leap, called my boss. I said, man, I don't think I can do this anymore, right? It was like being a hamster on the wheel, the same thing, client issues, short staff, no big deal. I just wanted to help the business owner. So I took the leap, I left. I decided to become a business consultant to help people prepare to get bank loans. I didn't know I could be a loan broker. I didn't know any of that.
Right.
I took a program. I discovered a program where you can become a certified commercial loan broker. They'll teach you the space. They paired me with like 200 lenders. And I took multiple programs, by the way, because each program has a different set of lenders, and some programs are more of a niche focus, like some are specifically real estate. Others are more broad, where you could do equipment lending, real estate. You could do unsecured loans and lines of credit, factoring, asset-based lending. So I learned all of these different lending techniques through the program. And then once I was complete with the program, it was like I shot out of a rocket. I was so hungry to build and get started because I felt like I was young enough to where if I started my story now, my story would be different, but my plot would be like those guys' plot. All those millionaires that I sat in front of, all the people that were telling me about their business. I know we may have ups and downs. I know things may get hard, but if I stick with it, I believe that the end will be great.
That's beautiful, bro. That's beautiful. Wow. Introduction, your bio is profound. I mean, what stuck out the most is you're working for this catering company.
Yep.
And you see this lady, and going back, because you're a man of faith. I'm a man of faith, right? And you said something very profound that's in scripture. You have not because you ask not, right? And you took that leap of faith knowing that you may have not looked up to par in this environment at the time. But just imagine if Brenden didn't make that step to even acknowledging this woman, where would you be? Have you ever thought about that? Like, looking back in retrospect to saying, like, what if I didn't, like...
That's crazy.
What if I didn't even, like, approach this woman? Where would my life be right now?
Man, that is crazy to think about. Do I go back and think about that? No. Thinking about that now, I might be like some manager in a retail space or something.
Wow.
Or, maybe would have became a catering manager. I might be doing catering right now,
God is amazing, bro.
I still study finance on my own and things because I always liked finance. But, that's why we have to listen to him and heed his voice. And, I am a man of faith, but I didn't write the story.
Correct.
Right? That's one thing about my testimony that I can't take away the fact that God was in that. Nothing I could do. It wasn't on my own. I prayed. I told God where I liked to work, what I wanted. And just by happenstance, I was on the schedule where we were serving a bank. Even from that, I didn't know. I didn't get to pick, let me plan in advance to be on there. I would have came with a clean cut and ready. If it was pre-planned. Yeah. But it wasn't pre-planned. Yeah. I just showed up. And then sometimes, even when you think you're not ready, like God will tell you to do this. Just like he told Gideon, right? Just like David taking on Goliath, like that was a bold move of faith. Like everybody was like, dude, you just a boy. Like he believed in God that he could take that. He got a throne because of that.
Right. Yeah, Moses. It goes all the way back, man. Right. Joseph. Yeah, man. Right. This is biblical, man. But okay, so now you are a commercial loan officer, right? So you specialize in helping small business owners gain the right capital to scale their business. Mm-hmm. Let's get into that. Like, what is your team? What are you all looking for when it comes to a small business owner wanting to get capital?
So it depends on what type of capital they're looking for. So if they're unsecured loan and line of credit, I look for at least a decent credit score, right? And by decent, I mean 700 plus, or maybe that's technically a good credit score. We want a good credit score. So you can have one or two, but you can't not have both. And I'm about to explain that. So either you have money and no credit, or you have credit and no money. But if you don't have money or credit, it's really hard to get you financing.
Okay, let me just intervene on that. I strongly feel, I'm in the space of credit, right? And I strongly feel that you have to have some type of money to have substantial credit, right? Because of the fact that, hey, listen, you understand you're paying your bills on time. Where are you getting the money to pay your bills, right? That's 35% of your credit score. Mm-hmm. If you have credit cards, amounts owed, that's 30%. How are you paying down your credit cards? Mm-hmm. So I feel like it's not how much money you make, it's what you do with the money you make, if that makes sense.
So for me, and I see what you're saying.
Go ahead.
For me, when I say have money, we're looking at the money left over after you pay that.
Gotcha.
So if you have no cash flow after your current debt or expenses, the main question is, how are you going to repay? You know what I'm saying?
This is good. Hey, that's why I wanted to expound, because I want to open up this dialogue to really get our audience to really open up their thinking caps. But go ahead.
Right. So what the bank is looking for is repayability. So if you're maxed out on credit cards right now, but you're making the payments, if your credit is good and you're making the payments, the question is, how much capital do you have left over to make more payments? Like, what are you going to do with this debt? If your debt consolidating and you're getting a lower interest rate, then yeah, we can make that work, because it's the same money. You're going to have more breathing room. You just need a lower rate. So we'll pay off those credit cards. Credit cards are 29, 30% interest rate, give you a 7 or 8% term loan, and you can save some of that interest in your pocket. That makes sense. But if you're looking for like a business loan or business line of credit, and you say, hey, Brenden, we make, and I see this all the time, by the way. Hey, Brenden, we make 6 figures or 250 or something like that. And then they say, okay, let me see your bank statements. And all the money that's coming in the business for profit is going right back out, and there's nothing left over for the month. Even though your business makes gross amount of money, the bank is not seeing where you have enough money to pay back an additional loan, or take on, I should say, more debt.
Got it. And you all are looking at like daily balance.
Correct.
Okay, got it as well. Makes sense. That's good. What's your stance on MCA?
So I'm not a fan of MCA. It's not something that I advertise or promote to do. There was one, I guess you could say, emergency case. I had a client that was just begging for it. Now, for me, I strongly educate my clients as to what they're getting into. And he was just like, Brenden, I need I need a loan. I need a loan. Couldn't get any other loan. I said, dude, with your credit score and with your cash flow right now, the only loan you're going to get is the loan you don't want. I told him the rates, got off the phone with him. Guy called me back a couple months later, was like, Brenden, I really need that. So we went through the process. It's not something that I promote, but he actually paid it off. He paid it off. That was one instance. Now, most of the time, I get a horror story with MCAs. And this is where MCAs get really bad. I had a client that came to me to try to get out of his MCAs. The problem was he took an MCA, then they got another MCA to pay the current MCA.
Oh, man.
So they start stacking these MCAs, and it's just like digging a hole. Now, previously, before there was an update to the SBA, you could have MCA loans and then get an SBA loan to pay off those MCAs, and you'll just be on a term loan, and you're like, all right, that's over with. Never doing that again.
Right.
But the SBA updated its policy to where they do a look back at what your existing debt was. And if it was an MCA, they no longer allow that to be paid off. So you have to go conventional now. And conventional is a little harder than SBA. They're not as forgiving. So not to be too technical, but if you don't qualify for conventional financing, you're going to have to pay off the MCA. And again, MCAs is not something that I like to promote. I strongly caution and steer away from doing MCA loans because that type of financing is a daily payment, a weekly payment, or bi-weekly payments. Most people, when they think loans, they think it's a monthly payment. And you can cash flow. You got 30 days to figure it out. Make sure you make this payment. MCA can be daily. It can be weekly or bi-weekly. Imagine if you had to pay a $700 payment every week. That's crushing. That's crushing. But some people sign up for that because there's something called opportunity cost of capital. Some people think, well, if I take this money, I know that payment is going to be substantial, but what can I do with that money?
What can I do with that money?
To make it come back? So some people are thinking about the opportunity cost. Again, I'm a firm component of waiting, get your credit up, get some cash flow in. I'd rather go the slow tortoise route to where you have something more manageable than take more risk and get an MCA.
That's so good, man. And we were talking about it before the episode, and we've had clients that have gone the MCA route because we live in this microwave era, right? Everything, and I got to get this now. I have goals that I'm looking to accomplish, and then, like you said, you have that client that will circle the block and say,
"Man, I really need it.
I really need it." Yeah. And in our client's case, a couple of our clients' case, it was like, I made a bad decision. I should have listened to you all's guidance. Right. And of course, we're here to guide and to provide those realistic roadmaps, but ultimately it's up to the client to make that decision at that time. But I mean, just if you don't mind giving the audience some just type of, it's keeping it real with the Browns, by the way, people. So we already know we're going to keep it real, but giving them some type of perspective when it comes to ensuring that they're not digging themselves in a deeper hole and that they're following the expert's expertise. Because here's the thing, I will get clients, even my wife, we'll get clients that'll come to us about fixing their credit, and we're on the phone with them, and they'll become combative with us. And it's like, why are you becoming combative with the expert? You need help. Mm-hmm. We have a solution to your problem. And I came to the conclusion, Brenden, that some of our clients have dealt with or are dealing with what I call financial trauma, where they're bringing that financial trauma to us based off of an experience, and they're bleeding it onto our company. And it's like, we're just here to provide a solution. Have you ever dealt with that? And if you can provide some advice to our viewers on shifting that paradigm, shifting that mindset a little bit so you can get to that next level in your life and in your business.
Yeah, so just from my experience working in the bank and working with several clients over time has taught me that if you build slowly and build correctly, it'll pay off in the long term. So you said advice, right?
Get some advice, yeah.
So what I recommend is if you can bootstrap and save. Let me say this. I like to think of business as like a rocket ship. I don't know if we have any space connoisseurs or nerds, I would say, in your audience, but the Artemis 2 just took off, and there's a big deal about that. But think about your business as a rocket ship. You spend most of your fuel trying to get off the ground. So if you're a startup business and you need capital, what I strongly recommend would be bootstrapping if you need to take on an additional job, and then also making sure you're feeding your brain financial information. A lot of times we get our financial knowledge from growing up with our parents and with our family. I grew up around some folks that if the phone rang and you had caller ID and the number was like an 888 or oh, don't answer that. You know what I'm saying?
Facts.
That's how I grew up.
Yep.
I had to relearn my thinking and my knowledge in reference to what it is finance is. So one, always be a student, always learn and seek. There's a lot of people out there that give great financial advice. And then in your exploration, you will hear a common pattern and common themes of what people that you find successful in your industry are doing with their finances. So number one, definitely get knowledge. Number two, I would say take your time. Have a respect for finance. Have a respect for debt. Debt can be used as a tool, or it could be a noose around your neck. This thing can hang you. It can cause you to file bankruptcy. It can cause you to shut down your business completely. I have a very strong respect for it. Get debt in your business name, if at all possible, if you can. A lot of business loans will make you personally guarantee, but this is the credit expert here. But those credit cards and those business loans, if you get it on your EIN number, will report to your business credit profile, not your personal. What you don't want to do is take out personal loans and get personal credit cards for your business. I would say bootstrap best you can. In the beginning, if you swipe on a 0% interest card in your personal name, try to erase that as soon as possible. I don't recommend doing that, but I understand everybody has different journeys, and some people do that. But if you have that credit, get a business credit card, get 0% on your business credit card side, and then do it if you could wait. Those are the main keys I would give, man. Have a great respect for knowledge, have a great respect for debt, and do it in your business name as often as possible. Hopefully that answers.
Love it, man. Absolutely. Guys, we're going to make sure we have Brenden's credentials in the description below, so make sure you guys tap in with him. If you are a business owner, you're looking to get some capital. So, Brenden, what types of funding are business owners applying for right now in today's economic climate?
Man, dude.
Let's say, Coach Darius, I'm 6 months in. I think that's the minimum time frame you need to be in business. I have about $5,000 in monthly gross income. What can I qualify for? What type of funding am I able to apply for?
What's your credit?
690.
Oh, 690. All right, so 690 is a little tough. Okay, so in today's environment, you have to think of banks as like a shifting and a changing entity. They can update their policy. Their policy isn't law, right? Their policy is just the rules that they are abiding by right now. So in this economy, banks have become more relational versus transactional. By relational, that means they'll want you to come and open an account with them. So say, hey, D, if we're going to give you this money, what you going to do for us? It's a relationship. Relationships give and take. We may want you to move your operating account from, let's say you're with Chase, but I'm with Bank of America. Why isn't Chase giving you that money? Oh, we could give you some money, but we're going to need that account to come over here. So that's what I mean by they're becoming more relational. With the 690 credit score, that's very, very close. I would say if you can get to 710 or above in this environment, they just simply raise the credit criteria because they have they have people at the top that are forecasting, reading reports, economic data, layoffs. You have AI disrupting. People are moving around and changing jobs. So they want a 711 credit score above a 710 and higher to really qualify for some unsecured funding. Now, when I was in the bank, getting someone approved without income verification was one of the easiest ways to get them funding. And we're talking $30,000, $50,000. They just had the credit, no questions. Now, if your credit isn't high enough, you have to provide income. Mm-hmm. So if you have the 690, we're going to need to see your income. And that income is going to have to be, if it's a large institution, they're going to want to see that you pay taxes on that. So you told me you make a certain amount, but let me see your tax return since you're a business owner. Well, you've been in business 6 months. I don't have a tax return. Well, your credit needs to come up then.
Makes sense. That's good. That's so good, man. Appreciate that. What are the biggest misconceptions entrepreneurs have about commercial lending?
So one of the biggest misconceptions is the rates, right? They have this idea that if I go to a non-bank institution, like a private money lender, hard money, I'm going to pay an extraordinary, crazy rate. It's going to be a high rate. I don't want that. Okay, well, let's look at the trade-offs here. And I think that a lot of people don't understand the benefits that other lenders offer. So one of the benefits is less paperwork. If you're buying something that has real estate, like if you're a real estate investor and you want to do fix and flip, buy and hold, cash out, refinance, any of that, they're not checking for your tax returns. Mm-hmm. They are looking at the property and if the property can cash flow this debt. What does that mean for you? Well, I don't have to show a lot of income and in turn write a check to the IRS because I'm showing a lot of income. I can go to this lender here, pay a little bit more in interest than I would get at the bank because these private lenders are going to be 1 to 2 points higher. Some people think it's like 10 or something insane. There are those type of lenders out there, but most private lenders stay competitive around 1 to 2 points higher than the bank. And in exchange, you get a quick close, you get no income verification, and you get the money that you were looking for or the property that you were looking for in that case. So I think that's the benefit of using alternative lenders. If you use a bank, 9 times out of 10, they're going to pull in like a full underwrite. So you have to just be ready. If you're dealing with Bank of America, Chase, and you don't fit their credit box for an unsecured loan, just be prepared to have all your paperwork in order. Contact your tax person or CPA to get it.
Timing is everything, I feel like, when it comes to going the traditional banking route. Mm-hmm. If I'm, accurate in that regard, I feel like having all your ducks in a row is essential. Mm-hmm. And sometimes, again, I'm emphasizing it because we see it and hear it so much where, entrepreneurs are like, they're pressed. It may be this restaurant owner that's trying to open up a new establishment and they're like, I need this done right now. I know exactly I know the location.
That's when you're not going to get it. I see what you're saying.
Yeah.
So when you need it, it's better to have it and not need it than to need it and not have it. And this is coming from someone who worked in a traditional bank. Yeah, we know you need it. You look tight on your financials. We don't know if you could pay it back because you need it so bad. So the number one question for the bank is repayability. You're tight. Over the last 3 to 6 months, we've seen declining revenues. This is something that's built up over time. And when we look at your financials, we can see that. Now, are we comfortable lending you the money? Put yourself in the banker's shoes. Would I lend this person my money? Mm. You know what I'm saying? That's how they're looking at it. So if D, you show me your business, it's like, man, Brenden, I really need it. But dude, like the last couple of months been kind of tight, man. I don't know if I'm going to give you my money, right? So it's better to plan for it, like you said. You said timing is key. We just passed the tax deadline. If you were looking to get bank financing, we're talking about good interest rates, it may take 6 months to a year to prep for that. You may have to plan. You may have to save money. Okay, I know I'm going to write a check for that to the IRS in 2026 because I want to get money to the bank. If you want to get bank financing, I'm talking about big financing now. We're talking about $250,000 or more. You're going to have to show tax returns. You're going to have to plan for that. And you can take this year that we're in, start saving money, and then talk to your CPA and say, hey, I want to borrow a large amount of money. I want the bank to give me a good line of credit. How much money should I show? And what is that tax bill going to be? You either pay the IRS or you're going to pay the alternative lenders and 1 to 2 points in interest if you still want to get a loan outside the bank. But if you want bank financing, you're going to have to pay the IRS. I hope that made it.
You're dropping nuggets, man. You're dropping major nuggets value. I know that our audience is going to appreciate this for sure because I'm even learning. I'm a student. I'm soaking up. I'm taking copious notes mentally, and I'm going to watch this episode, and I'm going to be writing stuff down myself, man, because I feel like we're all learning, man, as entrepreneurs and business owners. So we appreciate that. So let's talk about common credit mistakes. Let's kind of like piggyback off of the credit thing. Common credit mistakes that quietly kill funding opportunities. Where a person is right there at the finish line. They have almost everything, and they do something with their credit that can just dismantle the whole deal. I'm pretty sure you've been through this scenario or situation similar before.
I'm in it right now. So I would always say make sure you check your credit before applying, to have a good estimate. A red flag to me is where a client wants to get a loan and I'm having that intro conversation, that discovery call with them. I'm like, okay, hey, where's credit at today? Oh, I don't know. What do you mean you don't know where your credit is? I don't say that over the phone, but I'm like, okay, all right, question mark for credit. What is your income? I move to the next question. But usually that tells me it's probably 50% or less that they're gonna get approved, right? They high chance that they're gonna get declined. So number one thing before you apply, check your credit. Number two, continue making payments. You don't have to do anything big or shift. If you have debt, a credit card, you don't have to open up a new credit card, do a balance transfer thinking your credit score is going to jump. Or, okay, let me hurry up and make this large payment on my credit cards, thinking my credit card's going to, it should jump to. Some people forecast, they don't speak to an expert. They forecast on their own what their credit score should be. And they spend their money and then their credit doesn't jump up like they thought they would. And then now that money's gone and now you don't check the box or get the special promotion. If your credit was 730, now it's 715. It didn't jump as high. So don't make any major moves. Make your payments on time. Don't take out any more credit. If you're familiar in the real estate environment, realtors will say all the time, we're about to close, and this person done brought a doggone car on their credit, and now they messed the whole mortgage up. You can't even get a house because you brought a car. Yeah. So I would say don't mess up getting the house doing something else with your credit. And that's an analogy, but stay calm, stay consistent in the process, plan, right? Look at your credit score before. I'm planning on some for my business, taking my business to the next level, but that plan is already in my head and already in place. Don't jump at it, right? Plan for it, right? If your business is seasonal and you're coming into the high season right now, like if you're a lawn care company and you know the sales is going to jump right now, after that money starts hitting the bank, and if credit's good, that's when I'll apply. Apply when the money's in the bank. Apply when the credit's good. Don't wait till the money starts coming down to apply. Apply right now to maximize the funding potential.
That's so good, man. That's so good. Yeah, even with us, man, full transparency, like we are a seasonal industry. Like with credit, like our peak seasons our tax time all the way to the end of September. Slow season is October to top of the year. But this is one of the things that I even exercise going through the ebbs and flows of our business and trial and error to say, okay, during those down seasons, how can we continue to generate cash flow, right? Creating additional services within our business model to keep that cash flow afloat. So when our CPA comes and says, I didn't even realize, dude, we just got a new CPA. The whole time, this is where my wife always says, you have to inspect what you expect within your business. Because my head was down where we had tax professionals thinking, oh, this accounting has already done the paperwork. Now, because we make a certain amount of income, we are now filing as an S corp. So the last 2 years, I'm thinking our company is an S corp. We recently found out we are not an S corp. So our new CPA just had to file a late election, right, before April 15th on our business. Because when I looked at that tax bill, bro, I got lightheaded. I got lightheaded. I said, oh my gosh. So you're absolutely right. We can't hit a target that we can't see. We have to inspect what we expect when it comes to our business, our credit, and we're big on it with our clients, ensuring like, treat your credit like your adult report card, your credit report like your adult report card, because lenders, that's what they look at. They assess to determine if you're a liability or an asset to them. Why should I give Mr. Brown a $300,000 loan, right?
100%. And I'll piggyback off that. Back in school, when they talk about credit, they say your credit is your character. And I'll just give you a quick moment when that when that was real for me. And I'm a lender. Like, I never thought about it as, I knew it stands for character, like your payments and things like that. But quick testimony, I'm a landlord, so we own investment properties as well. And one thing I do promote is small business, especially in real estate, rental, and leasing, because big companies, when you have hundreds of properties, all they're doing is looking at applications, yes or no. But if it's a person, right, you can open the door to somebody that may have just got laid off because of COVID or something bad on their report. You could make an exception for them. Well, I was talking with someone was looking at renting my property, and I network with other landlords that are like, above me in the space. You own more properties. I say, hey man, what do you think of this person here? She got laid off from her job, and her credit is this. And then he was just like, but I was just like, we kind of know her. She's a friend of a friend, and she's a good person. I think I was real green in this.
Take a face value.
Yeah. I was like, she's a good person. She'll do well. And he was just like, well, if her credit is bad, you could throw that good person out the window. He said, that's her character right there.
Wow.
And that hit me like a ton of bricks. I was like, man, bro, because people, we don't see what's on people's bank statements, right? In person, but where your money goes, that is what's in your heart. You know what I'm saying? And what you speak too. But what you're spending your money on, that's your treasure, right? Where your treasure lie, there where your heart be also, I believe, right? So if you're not paying your bills, and when he said that to me, I was just like, dang. And that changed my perspective. If someone has bad credit and they're telling you, right, a lot of that can just be like, what they're saying. But if their if their report card is bad, not just a recent bad, because there are some things you can say, well, I was in the hospital.
For sure.
There are certain situations that you could write a letter of explanation and get over. But if it's consistent, you haven't been holding a job for a long time, every 2 years or every year you got a different job, or this, that, and the third on your credit report, man, that is your character. Something's going on. So I have a greater level of respect after that landlord said that to me.
That's deep, man. It's it's one of those things where even with us, when we bought our first home and we were oblivious to it, we bought our home with a 580 credit score. 580, man, and just wet behind the ears, naive, very green.
Yeah.
And looking back, I'm like, we went through that for a reason. I don't feel that we would be in this industry if we didn't go through that process, right? So now we are serving first-time home buyers in particular to say, hey, listen, it's okay. You don't know what you don't know, but don't continuously make these habitual decisions and be in this habitual pattern of making the same mistakes over and over again with your finances and with your credit. Because at this point, from a biblical perspective, you're living in a Pharaoh cycle. You're living in this Pharaoh cycle.
Yeah.
And we don't want that for you. So that's really good. And even now, people are so focused on the credit score, bro. I even share with our clients, it's more than just about your credit. It's your credit profile. Your credit profile dictates your credit score. So the lenders are looking at your data points. They're also now, you can't even get hired for a job if you have bad credit. Because like you said, they're looking to see.
That's the crazy part.
You know?
Credit affects your job. It can affect your insurance rate.
Yeah.
You can have a good driving record, but bad credit.
Absolutely. So there was a family member that asked me, they were like, how much are you paying for you all's auto insurance coverage? I'm like, well, my wife's Benz, we pay like $180 a month for coverage. I said,
oh, wow.
That's through Progressive.
Yeah.
But that's because substantial credit. Like they're looking at that.
Yeah.
Like, so it's, and of course, and I always, each episode I share with our audience, check your credit report, not Credit Karma, get a reputable credit monitoring provider so you can see not just your credit score, but like your insurance score, your grade letter index score, so you can save money, right? So I think that's where we come in, but also ensuring like, okay, you guys are looking for business funding. We're going to send you to Brenden's team, of course, but it starts on this side. We want to make his job and his team's job a little bit more easier so they can ensure that you experience a seamless process, but you also have to play your part as well.
Right. So
we're going to talk about scaling without sabotaging. Sabotaging the success, sabotaging the ultimate goal to getting capital. All right. So we're going to use real-time wins. What is a scenario that you've had where you had a client that was super close, but they did something, they sabotaged getting funded? Where you knew it, like, oh man, I hate to break this news to him.
Okay, I got a client I am dealing with, and this is a real estate investor. Now, this is a situation where they did something that was good, but it's tough to get them funding for their property. So they own a property, and a lot of people in real estate, sometimes they get inspired by these DIY shows where you're knocking down walls and changing stuff up. Well, lenders don't love change that much. They're very slow to move. They're going to wait to see if there's a market for something, and then if there truly is a market for something, then they will enter that market and offer funding for said product. What this investor did was buy a property, change it from its original state, paid off the property. Now the property's cash flowing good. So as an investor, he did well. But now he wants to get cash out of that property. And the problem is there's no comps because he changed the property so much. So not to get super technical, but his property is so unique, they can't really determine a valuation on that property. So we can't give him a loan because he made too much changes on that. At least with that lender, we're going to still shop around and see, but it's extremely risky for a lender because they can't confirm the value of a property. So that's just one example there in a in a lender space. Another example is just your client that's looking to get funding and they co-sign for someone and that someone hasn't paid their bill. I'm dealing with that now in an SBA loan situation where I have a client that wasn't married but put a girlfriend on a property to pay a mortgage and she didn't pay. And now they want to get funded for their business, but because she didn't pay, he's already been declined by a specific lender, and that's causing some issues. That's something where I would have to overcome and navigate to ultimately get him funding. But that's a hurdle.
That was going to be my question. Is there an out to that situation? Are they able to still potentially get funding despite the girlfriend?
Yeah. So when it comes to SBA financing, if there's issues, it's best to address those issues on the front end. I think before they came to me, they applied somewhere else and was declined for that reason. So I was just like, well, Brenden, here is new discovery. Can you still help us? I'm like, yeah, we could write a letter of explanation as to what happened. We may ultimately have to take less money than what you normally would be approved for. And your partner has to be really strong. So I have a lot of recommendations for that business partner to show a lot of strength in the deal for underwriting to get comfortable with the situation.
Makes sense. That's good. That's really good. We had one client actually, so let me ask you this. How long does it typically take before I even get into the story of one of our clients? They actually just they went through Kennesaw State to get the SBA, but they had to, create their business proposal. But Kennesaw State, the administrating team over at Kennesaw State, helped them create the right business proposal to ensure their operational agreement, things of that nature. But how long does it typically take to receive an SBA loan?
Great question. So SBA usually is 45 to 90 days. Okay. I feel like 45 is really aggressive. Usually 60 to 90 days, but some of the smaller like SBA Express loans can be done in about 45 days.
Got it. Okay. Got it. Is that typically the same time frame as traditional banking loan?
No. Regular bank loan, that's a 30-day loan. That could be done pretty quickly.
Now, in the interim of traditional bank loan, does it take about that 30 to 45 days because they are, of course, reviewing the applicant's credentials and information? But I know, like, let's say they say, well, Mr. Brown, you have to put up not only your house for collateral, you got to put up X, Y, and Z. Are they going through that
third-party reports?
Yeah. Okay, got it.
So, and that's where we break it down as to what type of loan, the person's trying to get. So if they're looking at regular traditional funding for, unsecured funding, just money, no collateral involved, 30 days or less, sometimes we can get that in about a week. Home equity line of credit, we've done home equity line of credits in like 2 weeks with a desktop appraisal. Now, I'm not trying to get you killed on the podcast because a lot of influencers would be like, don't do a desktop appraisal. They don't give you your make sure they're doing a full-blown appraisal. Well, banks do desktop appraisals because they're cheap. Zillow and the county tax assessor already kind of have like a valuation for your property. And that's public information. Then they just do a drive-by, take a picture, make sure nothing's going crazy with your lawn or ain't nothing flying off your roof. And then they give you a valuation on that. A full-blown is where they come in your house and see like, oh, man, this is a nice kitchen, beautiful cabinets, like there's some upgrades in here. And you may get more in value. Well, you likely will get more in value if you do a full-blown. So full-blown, if you do the full-blown inspection, yes, we're looking at like 35, 45 days for a home equity line of credit. If you let them do the desktop and you like the valuation and ultimately like the amount of money that you're receiving, that could be done within 2 weeks.
Wow. I just learned something new. Okay. Got it. All right, man, we're wrapping up, man. We know that you're a man. You got things that you got going on and you're making a real impact out here, so we're not going to keep you too long. But share a success story where the right funding strategy changed a business trajectory.
Ooh, I feel like that happens a lot. I see that a lot often. I have my favorite clients that I end up working with. I love all my clients, to be honest. They like kids. But there's certain stories that you just really remember. One of these clients owned a transportation company, was making great money. He just wasn't showing a lot of money on his tax returns, and he wanted to get a line of credit. Well, the bank he was with, and this is how I work with bankers, by the way, so I'm letting you in on the secret. The bank that he was with declined him because he didn't have enough money showing on his tax returns, income on his returns. However, he had money in the bank. He was like, I don't understand why you can't give me a loan. I got, over 6 figures with you in the bank. I don't even need your money. They start saying stuff like that. So the branch manager said, well, I can't help you, but I know someone who can. Referred him to me. Wow. So that's what my bankers do. They understand in the bank, we just can't lend because you got money in the bank. Yes, the bank is taking your money. They're lending it out. They are making money on your money, and your money's sitting there. And no, they are not giving you any money because you don't have any money on your tax returns. You're not showing your income. Some people feel like that isn't fair. That's the name of the game.
That's the name of the game.
I didn't make the rules, But me being a broker, I can shop the market for you and help you get additional funds out there. So the banker referred him to me. I was able to get him a $150,000 line of credit because we didn't look at his tax returns. We underwrote based on the cash on his bank statements. So we got him a $150,000 line of credit. He was very grateful. Now, the banks have all the money. They have the best rates. They can give you a 30-year term. They could write on a piece of – I had a high-level banker. I'm not going to say his name. Tell me. We had a conversation. He was over the mortgage department at my old bank. And we were talking about a specific client. And he said, Brenden, I could put whatever I want on the paper. And I was just like –
Hold on, what?
He said, Brenden, I could put whatever I want on the paper. He said, I can make the interest rate whatever I want on the paper. He was that high up in banking, and I'm like, there's a level, and this is just insider, there's a level where Elon Musk and Arthur Blank, those guys, right? They can go to a bank, and there's handshakes and agreements and stuff happens behind closed doors.
Oh, yeah, for sure. I believe
that. We wish we could have some of those opportunities.
Yeah.
But yeah, that was one deal that changed his business. And now if he wants to go back to the bank and get a bigger line of credit for a longer term, I say that because banks can put it 5-10-year term. I gave him a small line of credit. I think it was a 3-year term, but he used the capital, and we went off his bank statement. But he could upgrade his tax returns, pay the IRS, right? Instead of writing everything off, write them a check, go to his bank now, and then get a bigger line of credit. So I was just a short-term fixed-first solution, and then he goes back to his banker that had all his deposits and gets a large line of credit because he paid his taxes now.
Wow, look at that. You just set him up for the win.
Yeah. I can help in a short bridge situation where you need a loan from point A to point B. Now I said, okay, Brenden, I've been writing off my taxes for 5 years. Let me tell my accountant, I made $100,000 and I'm gonna have to pay that tax bill, right?
Yeah.
But now I can go get the best funding at the bank. Or I can stick with the alternative lenders, not write a check to the IRS, pay a point or two more in my interest rate and be okay.
Got it. So you're giving that client the option, but also explaining to them that they still have that leverage there.
They still have the leverage. Like you said earlier, you just have to plan for that.
Yeah.
You have to plan for that.
That makes sense. Yeah, because we keep talking about that tax bill, and I'm like,
you keep thinking about it.
Oh my God! But we're gonna get through it. We're gonna get through it, man. We're learning, man. So this is the last question before we get into our rapid fire round. I'm gonna ask you some questions, and we're gonna get it going. Lessons learned from your deals that didn't go as planned.
Man,
that shaped you into the commercial loan officer that you are today.
All right, cool. This is another gem. Leaving the bank, the commercial space, it can be kind of like the Wild Wild West in a sense. I learned that private money lenders and lenders aren't just family hedge funds and companies. It could be you and it could be me. There was this gangster realtor that I met in my career that I was doing a refinance of a commercial property for one of her clients. And her clients needed some money for a down payment. Well, she lent the client the money from her pocketbook. And she went to an attorney and put a lien on her property. So she had an official second lien position on this commercial property because she lent this client a significant amount of money for the down payment of the purchase of another property. And the agreement was, hey, you're going to pay me this interest rate, this monthly payment, and then you're going to refinance this in 2 years. Business owner agreed. It was a handshake. Came back to me to refinance one of the properties. We just got the loan for her to buy after the 2-year mark. Realtor gets paid back her money, and the client, gets the property with one loan. And I'm like, I never knew someone could just do that. Like, me and you could strike up a deal, and I could say, all right, I'm going to go to the attorney. I'm going to put a lien on your house, and I'm going to give you this money. And you're going to pay me a month. You could just draw that up. Get a notary, go to an attorney, and that's official.
But is that outside of business ethics?
How?
I'm looking at it from my perspective, not being in the industry. I would think okay.
Nah, that's what these lenders do, technically.
Okay.
They're just big and they got the suits and the payroll and the credibility and the advertising. But you can do a mom and pop loan in your LLC to someone else's business and get an attorney. Once you involve attorneys, everything's legit. You can get an attorney, a real estate attorney, to file the lien on your property. You have to go to the right attorney. It's a real estate attorney. We could put a lien on your house.
On your own home?
No, on your home.
Okay, that's okay. Gotcha. So it will be on that person's home.
Right.
Okay.
So if let's say I'm gonna lend you $50,000, right? But I'm gonna need collateral. I'm gonna need security, and you got some equity you built up in your house. You got your first loan. All right, I'm going to put a second lien on that. Now, your lender has to be okay with that, and if that's what you meant.
Right, yeah.
So your lender does have to be okay with a second lien position. Some lenders are, some lenders are not.
Got it.
If your lender's okay with that, and 9 times out of 10, they're totally fine with it because people get a mortgage at this bank and an equity line at that bank.
Makes sense. Okay, gotcha.
You know what I'm saying?
Okay, got it.
So I can put a lien on your property for $50K. I give you the cash. We'll set up your monthly payments, your interest rate. I feel better because my money isn't just out there unsecured.
Okay.
And then, you guys make your monthly payment. When I seen that in real life, that was something like, oh, the game's changed for me now. That's so different now. Private lending, I have several entrepreneurs that hit me up and say, because they know I see a lot of deals, people with money that want to earn better interest than what's in the stock market right now, what the S&P 500 is paying. They want to be the hard money lender in a sense, but they know I know the paperwork. So they say, hey, Brenden, man, if you know anybody that's, got any deals or wants to buy, I'm happy to give them if it's a good rate and stuff like that. Yeah, I could sell the rate, right? I could sell the rate. I make a little bit of money for doing the deal. And this person is now getting a monthly payment at, I don't know, if they can't go anywhere else. I told you alternative lenders are 1% to 2% higher than the bank. So let's say alternative lenders are 8%, 9% right now. Well, alternative lenders can't take you. So now you're going to have to come in mom and pop or Mr. John's, and he has money from doing a successful pressure washing business. He's trying to earn more money. Well, now he's going to be at 12% rate. But you want to do the flip. You want to do the deal. So you take John's deal. He has a lien against the property. You're paying him at 12%. You fix the property, you flip it, you pay him off and take your cut.
Wow. That's a major play.
I know, man. I know it's a lot, but my eyes opened up.
Wow.
When I seen that in real life. And I can tell you, man, I've never been the same. Me and my wife are thinking about, dude, you could put liens on people's properties, man.
Wow.
And lend your money and have collateral. You could be like an SBA lender. You could say, well, what collateral are you going to put up? These title pawn places, when you pay off your car, and don't go to them. I don't care. Like, I don't like them. If you pay off your car, take that. Remember that monthly payment you were paying and it's not coming out of your account?
Yeah.
Why would you sign up for that again? But I know people do that. But those title pawn places do it. They take your car title, they give you a little bit of cash, and now you got to pay. It's like you paying a car note again. They do it all the time.
That makes so much sense now. That definitely, yeah, that makes sense.
Yeah.
Wow. Listen, man, this is Keeping It Real with the Browns, man. Listen, we're going to have Brenden's credentials in the description. Make sure you guys tap in with him. He is really out here, as you guys can see, a man with real knowledge, real expertise, real value. So make sure you guys tap in with him. All right, brother. So before we wrap up, we have this thing we call rapid fire. Okay. So I'm going to hit you with some rapid questions. It's basically this or that, and you let me know exactly your stance and your answer on it. All right. Biggest red flag you see in funding applications?
Biggest red flag. Incomplete application, man. If they're not filling the application out correctly, it is an automatic red flag. Either they're not being fully truthful or they're trying to hide something, and we got to get to the bottom of that.
Got it. One funding move every serious entrepreneur should make in 2026.
In 2026, I would say, do your best to show some income on your tax return. Start planning so you can get lines of credit. Lines of credit are getting harder and harder to get for your everyday entrepreneur. They keep raising the bar in these banks. So get it while you can, because term loans are the thing now. They're lending the money, but it's not a revolving line of credit.
Makes sense. Makes sense. One myth about lending you love to retire forever.
A myth about lending. I want to say shop around. Your bank, just because they're your bank doesn't mean that they have to give you money. Banks have different appetites. Banks are investment companies. Think of them like investment companies. They have different buckets. One is transportation, one is hospitality, one is this industry, aerospace, retail. And if they're full on your industry, they may tell you no, not because you have bad credit, not because you don't have the capital. They may tell you no because they're no longer investing in that space. If something goes wrong in your industry, then they're liable for that effect. So they diversify their investments just like we all should. So I say shop around. You could use a broker like myself or any other good brokers out there to give you options, because banks may not lend to your specific industry, but they will take your money. They will take your deposits.
Wow. You heard it first. And we appreciate you, brother, for being on the platform, man. Listen, guys, again, we'll have Brenden's credentials in the description, his Instagram, his website. You guys schedule a call with them. He'll be more than happy, him and his team, to serve you guys. Until next time, we appreciate the love and support. We'll see you next week.